Good afternoon. Welcome back to the channel. Hope everybody's been having a good week. So all throughout YouTube, you're seeing people say 7 stocks to buy, 5 stocks to buy this, buy that. Um, I don't really like to do that, but this is what I will do. This is one stock that I'm buying. All right. So this is the considering the amount of subscribers I got, this is considered the underground. All right. And actually, shout out to those people that are subscribing and my current subscribers. I'm almost pretty much convinced at the growth rate that we're heading, I probably won't be able to monetize this channel for a long time, if ever. But you know what? That's fine. As long as I'm putting value out there and a good value proposition for people, for the content creation and all, that's what matters to me. All right, so what's the stock that I'm buying? All right, I've hinted it in prior videos, and I haven't really committed to it and to actually telling the social media aspect of things. My Patreon knows, but I mean, now it's time for the cat to be out of the bag. Navitas. This is a semiconductor. Um, this is a corporation that is in the semiconductor industry. They sell microchips. All right. So this is the thing about Navitas. What makes them special? All right. Well, the timing and the potential opportunity that they have is, what makes them special to me. Very small company, high growth rate, financials are looking good. They are not profitable. Um, but let's look at this actual industry, all right, and what's going on right now. First of all, the whole market is pretty much kind of pulling back. And if you've been watching my prior videos, I pretty much stated, in my last video, I said, you know what, market's probably going to go down. And it has, and it probably, maybe we see a little more to come. But let's look at the actual industry and some other companies that are, that are in the semiconductor place. So SMCI, if you're aware of this industry, and you should know that SMCI pretty much took a big hit, and that's because they didn't really give preliminary results. And they usually put out preliminary results, and they have been for years. Okay, years worth of reporting. So the market got spooked about that, and because of that, SMCI is a direct play on NVIDIA, and kind of actually I guess indirect and direct play because they're interconnected. SMCI does have business with NVIDIA, so because of that, Nvidia went down too. They took a 10% hit. Now, what do I think is going to happen with SMCI and Nvidia? All right. Um, this is what I personally think is going to happen, and I may be wrong, but I'm expecting those companies to slash their guidance on their revenue growth. All right. And I mean, that's pretty much what I'm expecting. High interest rates, the macroeconomical events. This is a cyclical industry. Um, but and if you know me and you've been following along on my channel, you should know that I really don't like cyclical industries or investing in cyclical industries. The idea of up and down and up and down. Of course, stocks all do that, but the proposition of I buy it right here and I try to get a 20% return real quick. That's not really my style. I like to buy companies and hold them for the long term as a long term investor for growth. So, but even though the industry is cyclical, there are still companies that provide that aspect of growth even in a cyclical environment. So Navitas represents that company and that opportunity. And let's pull up a chart on Navitas. Oh, and here's another thing. Here's another thing to consider. Navitas had earnings and they slashed their guidance. All right. So they were guiding 75% for revenue growth for 2024. and from their last recent earnings, they slashed it down to a little over 40% growth. Okay, and with their price to from a valuation standpoint, from price to sales metric, they're trading pretty high, pricing in that intense growth. But you know the market, they go once they sell something off, they kind of go a little overboard. Let's pull up a chart on Navitas. This company is near all-time lows, pretty much. Granted, I give it to you. The company's only been public a few years, but when we're at all-time lows and we have some catalysts coming up, maybe it's time to start buying into the actual weakness and starting the position. And let's look at that position. All right, let me pull it up real quick. I think I should have it. Okay, here's my current Navitas position. And in keeping with the transparency in the channel, here it is. Um, so you see, I bought some shares here on January 31st. Um, and I didn't buy much. Okay, so typically when I start a position, I only buy a little bit. Okay, it's a starter position. Unless I'm coming in late and I'm thinking the valuation's already down there to where I'm comfortable going in heavy, I'll do that. But that was not the case for Navitas, and Navitas is not going to be a position that I'm going to be building very aggressively, really quick, like some other positions you've seen me build real fast, that are more timing sensitive. No, Navitas is not profitable, and they're not projected to be profitable until they pretty much double their revenue. All right. Um, and with the price to sales at what they were trading at and the macroeconomical projections and what I was seeing, I was thinking, you know what? I think Navitas is going to take a hit, and all these semiconductors are going to take a hit. I mean, how I got there to that conclusion, that's a whole nother video of research of how I do things and so forth. But with that, I bought a couple $100 worth in January 31st, and I say, you know what? I'll just wait for it to come down. And I mean, it's not rocket science. Like I mean, I can kind of tell. I don't have a crystal ball, but I can say, oh, valuation's a little up there. And the valuation came down a little bit to where I was comfortable just buying a small little tiny starter position, and then 40% or near 40% decline later. I'm like, okay, now we're at the all-time low. We're pricing in the bad news. This is a good time for me to just start the position or get it more up and running. Not completely backing the truck up, but you know, I can expect Navitas. I mean, we're going down to the all-time low, which I think is around $3.50. We'll probably hit the all-time low, and I don't think the valuation. I think that Navitas can. We can see Navitas in the twos. And that's just part of investing in these small cap, little growth companies. Okay, they're often neglected in these high interest rate environments, and during these type of markets. So, and like I said the last video, the market is going to start neglecting these little smaller companies, and I think that's where the value is. So that's where I'm going to be positioning, and Navitas is part of that plan. All right. Where do I see not Navitas? Okay, what is the time horizon of the investment? Okay, so my window is in, once again, if you've been following along, usually my standard position is 10 G's of invested capital. Right now I bought $1,000 worth. All right, I put 1,000 in, and that recent buy that I bought, for that actual day, I actually timed the bottom. So, but I kind of knew that, okay, this stock's going to go. I timed the bottom and it spiked back up, but I knew it would bleed down past this bottom for that day later on. So I kind of figured that would happen. So I took chill pill. I'll probably, we dip a little more into like $3.50. I'll probably buy another chunk of shares. Maybe I buy another 1,000 worth, or maybe 100 or 200 shares or whatever. And I built this position up to 10 G's invested capital, and then I'd probably take my time with this one doing it, because I got all year to do it. And also, I'll reassess when we're getting close to the 10G invested capital. What I do is I reassess. Okay, how's the company doing? What's the macro looking like? How far from profitability are they? Growth rates. I reassess, and if I want to double or add more, I'll make that determination when that needs to be. All right. Long term, I see Navitas as the disruptor to the AMDs and NVIDIAs of today. All right. So I think Navitas is the new AMD, NVIDIA in 15, 20 years. Okay. 10, 15 years. I see Navitas as that disruptor and the next big dog, if you will, in the semiconductor space. All right. And this isn't a winner take all environment. Okay, there's several players, and Nvidia, and that doesn't mean AMD and Nvidia won't be successful over the course of these several years, which they probably will. But Navitas will. I'm thinking that Navitas will overtake the growth in that. We'll probably see better returns from Navitas, and maybe not within the next couple of years. I think Navitas might underperform. In fact, quite frankly, I think Navitas is a good chance Navitas underperforms the market in this year or two. Okay, until they reach profitability, and that's just my window of buying and building up my position. Is pretty much all that is. So, as far as the investment thesis, the quantitative and qualitative aspects, I'll put out separate videos for that when it pertains to Navitas with price targets and the investment thesis as a whole. But this video is pretty much the announcement of, hey, this is a stock I'm buying. All right. Um, Not financial advice to anybody. Once again, this is just what I'm doing. All right. So with that being said, I hope that y'all are getting value out of the channel, and this was a pretty informative video, and maybe an interesting aspect of how I'm positioning tactically within a portfolio. And I hope y'all have a good week coming up. And I'll probably end up maybe posting another video here or there in reference to some other companies. But with that being said, thank you all for your time. If you're finding value, subscribe, hit the like button, check out the Patreon, and comment down on the video below if you want me to take a look at a specific company and do analysis. I'm itching to pretty much interact with the people as I listen to the people. So once again, I love y'all. Take care and have a good day.